In today's video, we're going to take a look at Arbor Realty Trust, ticker symbol ABR. This is the 18th video that's a part of my portfolio series where I'm doing an in-depth analysis on all 32 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I'll say in every video in this series, this isn't done in any particular order, so just because this video is 18th in this series does not mean that this is my 18th favorite stock or my 18th largest holding. Also note that because I own all these holdings, I am biased towards them, so do your own research before making any investment decision for yourself. Also, let me know if there's any improvements to this series that I can make going forward. Feel free to check out last week's video, which was on the PCM fund, ticker symbol PCM, which is a 10% yielding dividend fund with decades of stable monthly distributions. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 307.923 shares of ABR stock. Their stock pays quarterly dividends with their next future dividend announced to be 43 cents per share. With the number of shares that I own of this stock, I receive roughly $132.40 every quarter, or divided by 3, which is what I like to do, that comes out to roughly $44.13 a month from this stock. Arbor Realty Trust is a company that specializes in loan originating and loan servicing. They primarily provide floating rate bridge loans to real estate owners, developers, and investors. Although they provide bridge loans for various property types, Arbor's primary focus is on the multifamily sector, specifically apartment buildings. The purpose of these bridge loans is so that property owners and developers can move ahead with the purchase of a property or renovating a property while they work out the terms of securing permanent longer-term financing. Issuers of bridge loans are able to charge much higher interest rates than average, and these loans are usually backed by some sort of collateral. This company is structured as a mortgage real estate investment trust, but they're much different than what you might be thinking of. Their business structure and how they generate revenue is significantly different from other companies in the mREIT sector, including Annaly Capital and AG&C Capital. Unlike most mREITs that don't experience much long-term growth in share price or dividend distributions, Arbor Realty is the gold standard in their industry when it comes to growth. They're easily one of my favorite mortgage REITs and one of my favorite high-yield growth stocks. Looking at this stock's 10-year performance, we can see a really great amount of share price growth for this company, which is really unusual for an mREIT. If we compare their performance to other mREITs, it's not even a competition. ABR just blows everyone else out of the water in terms of share price growth and dividend increases. So let's take a deeper look into Arbor Realty and see how they've been so successful at both growing their share price and at the same time offering a dividend yield that exceeds 10%. For starters, this company is internally managed and they describe themselves as a multifamily focused REIT with a premium operating platform that creates many strong diverse income streams through all economic cycles. Because they're internally managed, this allows them to save a lot of money since they don't have to pay an outside company to manage their investments for them, unlike a lot of other mREITs that exist. Arbor Realty's business performs two different functions. They originate different types of loans, mostly bridge loans, but they also offer preferred equity and mezzanine loans. As previously mentioned, the majority of their loans are in the multifamily sector at 91%, but they also have 7% for single-family rentals, 1% for land, and 1% for office properties. The other function Arbor Realty performs is originating, servicing, and selling mortgage loans through government-sponsored enterprises like Fannie Mae and Freddie Mac. These types of loans have low default rates, and according to Arbor Realty, there's a high barrier to entry for companies who want to do this exact same thing that they're doing. So what kind of results has Arbor Realty been seeing with these two business segments? This section in their latest investor presentation highlights how well this company's been performing. In the first quarter of 2023, their business generated distributable earnings of 62 cents per share, which is far higher than the dividend they paid back in May of 42 cents. This gives this company a payout ratio of 68%, which is the lowest I've seen for any mortgage REIT. Arbor Realty has had 11 straight years of dividend growth, including 11 increases in the last 13 quarters. If we look at their dividend distribution history on Seeking Alpha, we can see the impressive amount of growth ABR has gone through in terms of their dividend. In the last 5 years, the stock has been able to more than double their dividend distributions, again far better than any mREIT that I've ever seen. Arbor Realty also has a very high insider ownership percentage. I've talked about this in the past, but a high insider ownership percentage is a really good sign that the people who run this company are really confident in their ability to grow their business. When the company board is willing to stake their own personal financial futures in their own stock, that's often a really great sign. Insider owners currently own 13% of all outstanding shares of ABR, which is much higher than what I typically come across. Despite what people have been talking about in the real estate sector, the demand for Arbor Realty services has not been slowing down. Ivan Kaufman, who's the CEO of the company, made this statement on their latest earnings call. Quote, "We had a very strong first half of the year with exceptional results that once again clearly demonstrate our ability to generate strong earnings and dividends in all cycles. We understand very well the challenges that lie ahead and feel we are well positioned to manage through this cycle. Our earnings significantly exceeded our dividend run rate. We are invested in the right asset class with very stable liability structures, highlighted by a significant amount of non-recourse, non-market-to-market CLO debt with pricing that is well below the current market." So judging by this statement, Arbor has kept doing pretty well in our high interest rate environment. If you recall back in March, a company by the name of Ninja Research released a short report on Arbor Realty, who claimed the company was hiding a toxic real estate portfolio of mobile homes with a complex web of real and fake holding companies over the last decade. They also claimed that the company had spent millions of dollars on maintaining these properties and never reported them on their financial statements. I made a video on this report shortly after it was released in which I explained why I thought this research was bogus. It didn't make any sense to me that Arbor would be investing in mobile homes which have nothing to do with their core business of issuing bridge loans for apartment complexes. But as ridiculous as this report was, it caused the share price of ABR to fall by more than 20%, and even the company themselves responded to this Ninja Research paper in a press release. It's pretty rare for a company to respond to something like this, but for whatever reason, this report that didn't even have an author's name on it and was full of grammatical errors caused a lot of drama. I was so confident that this report was nonsense that in that video, I announced I had made an additional $1,000 purchase of ABR stock at $11.32. As you can imagine, at this point my only regret was not buying more, as I've enjoyed a more than 40% return on my investment since then. Up to this point, nothing on this report has ever been proven true, and I'm convinced it never will be. Over the last 10 years, ABR has delivered far superior returns compared to the S&P 500. You can see a $10,000 investment made in ABR 10 years ago would have left you with a total return of $55,366.49 if you reinvested your dividends. That comes out to an average annual return of roughly 18.66%. Compared to an S&P 500 index fund, you would have only seen an average annual return of 12.15%. I really shouldn't say only, because 12.15% every year is still pretty good, but just not as good as ABR. Obviously, a big part of Arbor's returns comes from reinvesting dividends, but you can see that even if you didn't reinvest your dividends, you would still be beating an S&P 500 index fund. More recently, ABR's been doing more share buybacks. They recently repurchased around $37 million worth of their own stock at an average price of $10.53. This represents a 17% discount to their book value, which was a really good deal. Companies perform share buybacks to boost the value of their stock and improve their financial statements. But just because a company does share buybacks does not guarantee it's a good idea, though. If it's not timed correctly, or if they don't have enough cash on hand, it could actually send the share price lower. But companies that typically do buybacks usually have a good amount of cash on their balance sheet, which again is a really good sign that shows that their financials are solid. We can see on Arbor's balance sheet that this company does have plenty of cash on hand, which is great. So in summary, this company continues to be very well run. It's a stock that's an exceptionally rare breed in that it's been able to keep growing in share price and offer an exceptionally high dividend yield. They're one of my favorite dividend stocks that'll hopefully continue to keep performing well into the future. And with that being said, that's going to wrap up today's video on Arbor Realty Trust. If you're interested, feel free to check out my Patreon, where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.